EduTrainer Workshops, the insurance industry's leading education and training platform, presents Life Insurance, the entry-level series, the products, the underwriting, and the planning applications to position your practice as the premier provider of insurance products in your community. Get on board, get on track, get to where you're going. And now, your EduTrainer National Insurance columnist, Steve Savant.
Well, welcome everyone. I'm Steve Savant, your EduTrainer and coach for our EduTrainer workshops and our entry level into our introduction into life insurance. And all this week, wait till you see how much I have to talk about. We're doing life insurance writers. And I mean, I cannot believe how many writers are out there. And we're going to try to touch the big ones, the ones that are the major life insurance writers, and then try to tell you a potpourri of everything else. But before we get into it, I want to remind you that if you're just coming into our class now, this is the last week of our life insurance course or our workshops, you need to really go back out and start at the beginning of all of our tutorials, all of our workshops, so that you can really understand what we're doing. And it's really to your benefit to do that. And one part of the benefit of starting over is that you need to go out to Lincoln Benefit's site for their software. We believe that the Eclipse software illustration system is one of the most effective learning tools if you're coming into our business. So if you haven't went out to their site, why don't you go there, www.lblsales.com/ETW. And as soon as you come to their site, you'll see the Run Installer. You just click on that and download it. And I think you'll find a tremendous advantage for yourself to go page by page. When we use the illustration system, you can use the illustration system right with us, and it's a really good learning curve in an issue like that. Another thing that Lincoln Benefit does, and their subsidiary, Allstate, the other way around actually, Allstate is their parent company. When I'm looking at this, Allstate and Lincoln Benefit has put together some really wonderful producer helps and marketing pieces. And the one I really like is called The Facts of Your Life. It comes in either booklet form or I can give it to you in an attached email. And the reason we like this is because it really helps you gather and harvest client assets and information. I have to say that when I first went through this, it was like they asked questions I had never even thought about. They're thought-provoking and they really position you to really go ahead and do some really great prospecting. And remember, you can see it, the address, the URL address on the bottom. It's so long I don't want to just write it out. Or if you go to our video, it's actually inside our search engine optimization description, and you can just copy and paste and then put it back into your browser. Another thing they have is they have prospecting letters and postcards. Fantastic, really. If you say, boy, I don't know how to talk to my client, I don't know how I can really do any kind of marketing, these are really good beginning helps. And remember, even though Allstate has made this already compliant, approved, and ready to go, if you're a FINRA registered rep license, you're going to have to go ahead and get your broker-dealer's compliance department to sign off on any use that you use on this. And if you're with an insurance agency that has similar protocols, you'll need to get their approval too. And remember, lastly, I always want to talk about, you hop out to our website. If you've missed any of our shows, and again, I recommend if you're just starting out or you're catching me at the last week here of 60 workshops that we've done on our entry level to life insurance, I recommend that you go to our website, www.brokersalliance.com. As soon as you come to our homepage, you'll see this big red button, on-demand video. All you have to do is click it, and not only will you see all of our EduTrainer workshop videos, but we also have Welcome to the Weekend, my show that's on the weekend, as well as our daily internet broadcast, Monday through Friday, the Business Insurance Zone. So that's www.brokersalliance.com. And remember, we're always giving away our life manual and our life vocabulary words. And if you haven't got this yet, just order it, The Biz at brokersalliance.com. That's The Biz, THEBIZ, and I'll send you the full manual plus the supporting vocabulary. And any of the documents that you see, you say, Steve, I saw a show, I saw you used a document. If we have it, we'll send it to you. Just request it, The Biz at brokersalliance.com. We're happy to do that. Well, today we're talking about life insurance writers. And I cannot believe all the writers that are in our business. And when I think about it, it is just like, I counted 58 different writers. I mean, I know there's more. I just try to get to the general writers. And so what I'm showing you today is the basic issue. But before I can talk about writers, I really need to kind of set you up when we're talking about writers. And so when I say writers, the first thing I want to talk about is the writer, is it a mortality writer or is it a morbidity writer? It makes a difference in my thinking. life insurance is a mortality product. And so if I use a mortality rider, let's say like a term rider, that also is a mortality product or a mortality piece of the pie. It's very similar, so I have no problem. But once I add a morbidity rider to it, let's say I'm going to use a long-term care or disability, I'm moving something that's really different and it's underwritten differently. And so the first thing I want to know is is it a mortality-driven rider, like a term rider, or is it a morbidity-driven rider, like a long-term care rider, or like a DI rider, or maybe a medical? Anything like that, I'm going to look at that. So when I'm measuring it, I want to make sure, do I have to pay for it or not? And that brings me to my second issue, because some of these riders are embedded into the contract and cost the client nothing. But in other places, the actual riders will cost. And you're going to have to measure, is it good to go ahead and make a hybrid out of a life insurance contract and a morbidity rider? And I don't know, you have to look at the price tag and say, what am I getting? Again, if they're free and they're embedded inside the contract, that's not a problem. But you have to really weigh out the costs. Is the cost really adding to it? Or if it's a permanent policy, is it taking away? Is it costing me more? Could I have bought this policy with that kind of a rider as a separate contract, let's say like as in DI, disability insurance, or long-term care, as separate from the life insurance contract? So I always want to be able to measure, before I use a rider, especially big riders like disability and long-term care, is it worth the while, the price tag, to go outside and get a standalone disability and or long-term care policy? Or should I add a rider here and see what kind of costs I have to do? And remember, I might have additional underwriting, or they may look at my actual numbers that I have from my mortality underwriting, my conventional life insurance, paramed, blood and urine, and they may look at that and start looking at numbers that may affect morbidity. So some underwriting is absolutely, they don't underwrite it, it's embedded in the contract. Some have more simplified underwriting, and some writers actually may call for some full underwriting, and they may be judging it on the morbidity balance sheet, not on the mortality balance sheet. So it's just a heads up. Another thing that I want to look at, and I always bring this up, is the writer current company practice? If they're charging, is it current company practice? Or is it contractually guaranteed? It makes a difference, because sometimes the price of these riders seem to be very economical, but the difference between the price tag of current company practice, whatever the company's declaring that year and what they're going to charge, could they charge more though, according to the contract, if they had to? So when I'm looking at the difference between current company practice and contractually guarantees or contractual imperatives, it's important to weigh out, is this a good deal or not a good deal? If the company ran into some problems and they had to actually increase their expense loads, would it be a good deal? And is the difference between these two so big that I don't want to take the chance? Or is it tight enough? Some carriers, not all, but some carriers, actually their current company practice may very well be the policy contractual guarantees. So I'm just bringing this up for you to kind of look at, because it's really important to see what you're getting. And one of the big issues, and I think it's a big one, especially when you're talking about riders, is when I'm talking about riders, and especially if I have morbidity riders, I want to know definitions. And definitions are going to be, when we're talking about life insurance, it seems to be so straight up. The client, the insured dies, we pay the claim to the beneficiaries. Pretty straight up. But when I add morbidity riders to this, I have to find out, what do they mean if I use the term chronic illness? What do they mean by long-term care? What do they mean by disability? All of a sudden, we're into a whole new legal language arena that morbidity products have always been in, but we're not used to it from a life side point of view. So when I'm looking at riders, I want to know the difference between what are the mortality definitions, which are pretty straight up, but what are the morbidity definitions? So whatever we talk about, especially if it's a morbidity rider, I'm going to be looking at that, because to me, that's very important to know. What is the language? And again, you can always order from a carrier their specimen contracts, and I carry so many of the definitions of the carriers. If you say, Steve, I'd love to see it. It is a huge document, but to me, it's worthwhile. If you say, shoot me all the riders you have and their definitions, I'll do that for you. It's over 100 pages, but it's really a great outline format, and it's easy to read. If you say, Steve, I'd want it, just order order it, thebiz at brokersalliance.com. That's THEBIZ at brokersalliance.com, and I'll send it to you. It is a whopper report, but boy, I tell you what, it really contains the vast majority of rider definitions, and it's really helpful, especially when you're trying to figure out, hey, what does this carrier mean by that? Now, another thing that I want to talk about, when I'm talking about definitions, I've talked about the cost. I've talked about, is it current company practice? I've actually tried to make a little bit of a division. Is it a mortality or morbidity issue? I also want to talk about, did it cost about underwriting? Was there no underwriting? Was there simplified underwriting? Was there full underwriting for these riders? Were they embedded in the contract or not? One of the big things when we talk about definitions, especially when I'm trying to say, is this what I'm getting? I want to look at the definitions of the rider, and I want to compare it to the language of a full contract. Let's say long-term care is my example. So when I look at long-term care, I'm going to look at a standalone contract versus the rider. Now, for example, there are several riders out that use long-term care. I want to know the length. I want to try to match up what is the duration of coverage. I want to look at the cost of the coverage for either the rider or the long-term care. I want to know what they define and how much it would cost if I did a standalone when I'm comparing them to, and to try to measure what am I getting for my, what I call bang for the buck. If I have a consumer, a regular person watching our EduTrainer workshops, which we do all the time, I'm trying to see, is it better to do a rider or long-term care? Once I assess the cost difference, my big difference is definitions. I want to make sure that if I have a claim, I want to make sure that I'm going to get paid. If I'm going to pay for something, I should really look at it as a good player. And remember, I really like carriers that also are already in the morbidity side of our practice. Maybe they're a big life insurance player, but they sell DI, disability. They sell long-term care. They already understand a lot of this. Sometimes the mechanics, the administration, sometimes the definitions are going to be better with a carrier that is not only a life insurance carrier, but it provides standalone large contracts for disability and long-term care. Then when they talk about chronic illness or terminal illness or accelerated benefits, then you can kind of say, well, I really like this carrier because they have already went down the road on this and they know how to do it. So when I'm looking at this, I also want to say, if I have a married couple, and this is one of those areas where you just want to look at, if I have a male and a female, and I'm talking about life insurance, and I'm talking about morbidity riders, sometimes I'm going to look at this and I know that the life portion of this portion is going to be cheaper for the female, but the morbidity portion is going to be cheaper for the male. So I really want to look at, do I use, for example, second to die that allows, and not all carriers do this, but some second to die allow morbidity riders, and there could be chronic illness, it could be accelerated benefits, could be terminal illness, it could be all these kind of riders. What's the price tag? Is it worth it? And sometimes I have to look at the combination or separate to figure out which is the best rider, and do they allow for return of premium? Do I get my money back if I don't use it? All those things I want to know. But the mechanics I'm really curious about is once I place my life insurance, which is the main reason why I'm buying it, and that brings me up into another issue, generally I don't try to target morbidity planning by using riders on top of life insurance. If I'm buying this, I'm buying it for life insurance sake. The application is for indemnification protection. Rarely do I want to use life insurance that I'm using for income purposes and then start throwing on riders, especially if they cost. If it's embedded in the contract, that's one thing. If I actually have to pay for it, that's a whole nother kettle of fish. And I want to make sure that it really makes math sense. So whether I'm using second to die, 2 people on 1 contract, whether I'm using a standalone contract, I just have to have a heads up. My life insurance on the male is always going to cost more. My life insurance on the female is going to cost less. Invertedly, mortality riders are going to cost less with men, and morbidity riders are going to cost less with females. So it always switches, and that's why I'm looking at life insurance with riders and whether they're mortality riders or they're morbidity riders, and then price it out against their standalone contracts.
This has been an EduTrainment Workshop, the educational division of the National Insurance Clearinghouse, the marketing arm of Brokers Alliance, and sponsored by Lincoln Benefit Life, an Allstate company.